On Business Incorporated, the Organization for Economic Cooperation and Development says corporate tax is more important for Africa and Latin America. South Africa Finance Chief Mboweni vows to avert debt crisis. And Tunisia's president moves on economy and COVID-19 after dismissing government. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We get the show started with intraday market numbers. And at intraday trading here in Africa, only the South African JSE index traded in the positive terrain. The index was up 1.59%. Nigeria's all-share index shed 0.11%. In Egypt, the EGX 30 was down 0.19%. Kenya closed in the red on Wednesday. And in the Middle East, all the markets we track were in the green territory at intraday. Abu Dhabi was up 1.03%. Dubai inched up 0.51%. In Saudi Arabia, the Tadawul index gained 0.31%, while the Qatari market also traded in the green, up 0.48%. In Europe, stocks inched higher in the morning as investors digested a fresh round of major corporate earnings and the U.S. Federal Reserve's reiteration of its dovish policy stance. Let's talk to Chelsea. Hello, Chelsea. Good afternoon. Well, it's a big day for European earnings. First up, let's talk about Volkswagen, which reported record earnings for the first half of the year. Tell us more.
Volkswagen, yes, sorry, we lost a connection there. But yes, so Volkswagen reported a very strong first half of the year. They say it's actually a record for the automaker. And this is in part because they are managing to really get through the semiconductor shortage that's making life very difficult for all automakers around the world. They say that they've really focused on high profit, their most profitable brands, including Porsche and Audi. So the semiconductors that they do have, they've sort of funneled those into those profitable brands. Daimler, I would note, is doing something similar with their more expensive brands as well. This does seem to be helping them through the semiconductor shortage, but they also did say today that they expect that to get worse in the third quarter. So they revised their outlook for deliveries this year down. Another bright spot I would note for Volkswagen is electric vehicles. Volkswagen wants to be the biggest player in the electric vehicle market. And in this quarter, they saw sales of electric vehicles rise by about 165%. So that does seem to be starting to really take off for the company.
Meanwhile, Airbus shares also soared after reporting a more than €2 billion profit. Has the aviation giant moved past the coronavirus pandemic?
Airbus is starting to really turn a corner. Airbus did say that they earned quite a large profit in this second quarter, about 2 billion euros, and they also raised their forecast for the rest of the year. They now expect to deliver around 600 jets compared to around 560 before. So they are starting to see the benefits of the fact that air travel is returning, particularly in a lot of domestic markets. Air travel has picked up quite a lot. Long distance travel is still a little bit depressed, but they are starting to see more and more orders roll in from their competitor, from those airline clients. We saw similarly strong results from Boeing. I know the main rival of Airbus in the U.S. They also reported a surprise profit for their second quarter and said that they also were starting to see the benefits of the recovery in the air travel market.
In the meantime, Germany has released its latest read on inflation as economies remain concerned about rising prices. Did this report show any sign that inflation is slowing?
Inflation continues to be very strong. This report shows consumer prices rose by 3.8% in July. That was higher than economists had been expecting, and actually is the highest rate that we've seen here in Germany since 2008. A big part of that was higher energy prices, which rose about 12% compared to the year earlier. Also, food prices were up about 4%. This is a bit of a messy month for this data, though, because in the previous year, in July 2020, the German government actually cut a key tax rate, so that brought down prices in general. So we're looking at a bit of a wonky comparison here, but otherwise prices are still going up, even with that sort of one-time factor aside. Prices are rising here all over the world as well. Economists are still saying that they expect that these price rises will start to fade once we get further into the reopening process. We heard this yesterday from the Federal Reserve Chief Jerome Powell that it does seem to be transitory, but of course there's a lot that could still turn out to be more permanent and more severe than economists are currently expecting.
All right, thank you very much, Chelsea, for updating us this intraday. See you tomorrow. Okay, let's cross over to London now, where the Global Education Summit is ongoing, and our correspondent Juliana Olenka joins us now to update us on the summit. Hello, Juliana. Good afternoon. Well, what are the highlights from this morning's discussions at the summit so far?
Good afternoon, Jimmy. Hopefully you can hear me, because there's so much going on at the moment. It's been a jam-packed morning. Definitely feels that we're not in London and we're more in somewhere like Geneva, and that's because there are so many stakeholders from education across the world. In the morning, very much introduction to the event. This is being hosted by the Global Partnership for Education. They've been going for almost 20 years with a goal to make sure that education and access to education is accessible to all. We know that children have been pretty much the hidden victims of the COVID-19 pandemic, and all of the delegates that are here today are pledging or hoping to raise about $5 billion to ensure that in this emergency we're going in at the moment, children across the world are not left behind.
And Nigeria's President Muhammadu Buhari is due to address the audience any moment now. What is he likely to say, and has he met with Prime Minister Boris Johnson yet?
The president actually just as we were talking walked past. He's going into, I believe, a bilateral meeting with Baroness Scotland, who is the Commonwealth head. He will be speaking to Prime Minister Boris Johnson much later in the afternoon. I believe there's so much obviously to discuss. They're very, very strong allies, strong partnership. I believe trade is going to be discussed, insecurity, development, infrastructure, the climate emergency. There is so much going on at the moment. I did speak with the Minister of State for Education earlier, and I have been informed that over $125 million has been donated to Nigeria to ensure that education, which of course is a massive issue, especially when it pertains to insecurity, is distributed. So yes, there's lots happening. Hopefully, once I've managed to catch my breath, I'll be able to update the team properly, but it's a really good summit focusing on protecting the lives and ensuring that education for children is accessible no matter where you are across the globe.
Right, thank you very much, Juliana. We'll look forward to those updates subsequently. Enjoy the rest of the day while you cover that. Shares in Hong Kong continued to see a rebound in Thursday trade from a two-day slump earlier in the week. Meanwhile, Asia-Pacific markets rose after the U.S. Federal Reserve left its benchmark interest rate near zero. Hong Kong's Hang Seng Index briefly jumped more than 3% in afternoon trading on Thursday before pairing some gains to trade about 2.8% higher. The index had dived more than 8% over 2 days early this week. Chinese tech stocks in Hong Kong, which were hit hard by the market rout earlier in the week, soared. Mainland Chinese stocks also saw strong gains, with the Shanghai Composite up about 1.3% and the Shenzhen Component surging 2.8%. In Japan, the Nikkei 225 advanced 0.73%, while the Topix Index gained 0.41%. In the U.S., stock futures were mixed in Thursday morning trade after the Federal Reserve concluded its two-day meeting of the Federal Open Market Committee by making no move on asset purchases. Dow Jones Industrial Average futures gained 105 points. Meanwhile, S&P 500 futures hovered above the flat line and Nasdaq 100 futures traded in negative territory. The major averages are on track to end the month higher, with the S&P up 2.4% for July. The Nasdaq Composite and Dow are up 1.8% and 1.2% each. Amazon, Pinterest, and Unserbusk are set to report earnings on Thursday. Traders will also watch out for the latest readings on initial jobless claims and pending home sales. And oil prices slipped but remained near $75 per barrel this morning as crude stockpiles in the United States, the world's top oil consumer, fell last week to their lowest since January 2020, and imports and production plumped. Brent crude oil futures fell 5 cents to $74.69 a barrel, while U.S. West Texas Intermediate crude futures slipped by 4 cents to $72.35 a barrel. Crude inventories fell by 4.1 million barrels in the week to July 23. The U.S., according to Energy Information Administration, helped by lower imports and a decline in weekly production. Still, some worries on fuel demand remain, with gasoline demand in the United States and Europe beginning to plateau. And gold prices rose to its highest level in over a week in early trade after the U.S. Federal Reserve failed to give a timeline for its tapering plans and said it was ways away from considering raising interest rates. Spot gold rose 0.5% to $1,815 per ounce, having earlier hit a peak since July 20 at $1,817. U.S. gold futures climbed 0.9% to $1,815.30 per ounce, while the U.S. Central Bank acknowledged discussing the eventual withdrawal of pandemic-era monetary policy support. In its statement, Chairman Jerome Powell said the U.S. job market still had some ground to cover before it would be time to pull back. Large stimulus measures tend to support gold, which is often considered a hedge against inflation and currency debasement. In other metals, silver rose 0.9% to $25.15 per ounce. Palladium rose 0.6% to $2,641 per ounce, while platinum gained 0.8% to $1,073. And away from the markets, here on the African continent, the Organization for Economic Cooperation and Development, the OECD, says corporate tax is more important as a source of tax revenue for governments in Africa and Latin America than it is for OECD countries. Its annual publication, Corporate Tax Statistics, released today, shows corporate tax accounts for 19.2% of total taxes in African countries and 15.6% of taxes in Latin America and the Caribbean. This compares to 10% in OECD countries. In Ireland, corporate tax accounts for approximately 18% of tax revenue. The publication finds that the rates of corporate tax have been falling globally over the past 2 decades. Of 111 jurisdictions, 94 had a lower corporate tax rate in 2021 than they had in 2000. 13 were the same, and 4 countries had higher rates. The average rate is 20% compared to 28.3% in 2000. The OECD says this finding underlines the importance of reaching agreement on a global minimum corporate tax rate in order to limit tax competition. We'll take a break. When we come back, Commodities Market Update is next. Do stay with us. On commodities market, we are looking at coffee as freezing temperatures brought on by severe frosts in Brazil's coffee belt this week have stoked fears of lower production, sending prices to near 7-year high. Coffee happens to be one of Nigeria's cash crop, with Nigeria having the potential to produce for export. Now, how can Nigeria take advantage of the rising price in the global coffee market? Let's talk to Favor Ogunreye, research analyst with Financial Derivatives Company. Hello, Favor. Good afternoon.
Good afternoon. Thank you for having me.
Yeah, so Nigeria has been a one-time large producer of coffee in Africa. Where are we now in terms of coffee production, and how can Nigeria take advantage of the rising coffee prices?
Nigeria's coffee production has been declining for several years now. I guess the highest production output that was recorded was in 2011, and that was the production output was about 2,525 tons, and that's declined to 1,117 tons in 2019. And this current production output is insignificant compared to top African coffee producing countries like Ethiopia, Uganda, Kenya, and even Ivory Coast. And the reasons why we are seeing this low production is pretty much the same with general problems facing the agricultural industry, like poor farming management and techniques. We also have climate change and crop diseases, which has affected the yield as well. And the only way Nigeria can take advantage of the rising coffee prices is if they reduce their import dependence on coffee, and they can only do that if they boost local production. And they can only boost this local production by addressing these challenges that I've stated earlier. And that way they can now meet local demand and also export to other countries.
Now, the EIU is now estimating an increase in global demand of 3.7% in 2021-2022 period based on optimistic projections about the global economic recovery. Now, with the new surge in the Delta variant and the possibility of further restrictions, do you think that these optimistic estimates are still realistic?
The increasing cases that we are seeing now due to the spike in Delta variant is definitely not good news. And but we don't expect this Delta variant to be as destructive as the first wave that we witnessed in late 2019 and early 2020, because we have about 3 vaccines now, and we're also seeing an increase in numbers of people who are fully vaccinated as well. So, but then Delta variant is still a threat, because coffee shops, restaurants will likely be forced to operate at minimum capacity. And we also have corporations and employees that might have to now go back to working from home activities, and that would definitely hamper out of home consumption. But then we cannot neglect the fact that these coffee companies are also intensifying efforts to be resilient through innovation. So most of them have invested in digital channels and in order to meet demand, and some of them have also adopted delivery and drive-through options from consumers to meet demand as well.
Now, talking about coffee companies, now Nigeria's coffee industry is dominated by Nescafe, controlling about 75% of the market. The industry is also faced with the challenge of increasing demand for freshly brewed coffee relative to instant coffee. Now, this is likely to reduce the barrier to entry. Nescafe is produced by the world's largest confectionery, that's Nestle, which has a diversified portfolio. In Nigeria, Nestle recorded a revenue growth of 22% to about 171 billion naira. That's in second quarter of this year. So do you think the growth in coffee demand in Nigeria will be primarily responsible for this success? And what will be the impact of the new entrants on the profitability and continued dominance of Nestle in Nigeria?
Like you rightly said, Nestle Nigeria has a robust product mix, and they are the market leaders in pretty much all their food product segments. So in seasoning industry, we have Maggi. In beverage, we have Milo, and also in ready-to-eat breakfast cereal, we have Golden Mon there. And these products are also considered to be necessary food, especially now that we're seeing a decline in consumer spending. So an increase in coffee demand is definitely a good one for Nescafe's brand. But then we can't say that it's primarily responsible for the increase in revenue that we are seeing now. But other revenue from the other food products definitely have a part to play. And in terms of the new entrants, an increase in new entrants definitely reduces market share, and that can also have an impact on revenue as well.
All right, thank you very much, Favor, for educating us on that. Thank you. We do appreciate your time. And Tunisia's president says his focus now is to address the dire economic and COVID-19 situation in his country. He plans to probe widespread corruption after invoking emergency powers on Sunday to seize control of government in a move his foes called a coup. He said more than 460 businessmen stole over 13.5 billion dinars. That's about $4.8 billion of public money. He is, however, proposing a settlement plan to recover the money, stressing that he has no intention of harming anyone or harming businessmen, according to his comments. Meanwhile, the World Bank has affirmed its unwavering commitment to support Tunisia and help meet the legitimate aspirations of its people to express their expectations and ambition to an economic recovery that brings growth and inclusive prosperity. And South African Finance Minister Tito Mboweni has affirmed his commitment to reining in debt amid concerns that the coronavirus pandemic and a week of deadly riots will further erode the state's already shaky finances. Public finances rapidly deteriorated over the past decade as loss-making state-owned companies, including Eskom Holdings and South African Airways, received a series of bailouts, and the government repeatedly failed to contain its wage bill or tackle graft unsustainable. South African government debt is seen peaking at 88.9% of GDP. Meanwhile, ratings agency S&P Global Ratings warns that the recent civil unrest in Gauteng and KwaZulu-Natal provinces in South Africa could slightly dent the expected rebound in gross domestic product for 2021. The unrest also hampered supply chains because of blocked road and rail transportation corridors, and is estimated to have cost the country 50 billion rand in lost output and placed at least 150,000 jobs at risk. Though the unrest is likely to shave about 0.7% of GDP, S&P currently forecasts that South Africa's economy will continue to recover and expand by 4.2% in line with the South African Reserve Bank's GDP outlook for 2021. And for many, the water hyacinth is a menace, an invasive plant that harms aquatic life and helps bacteria and mosquitoes. But Kenyan entrepreneur Dominic Kwankuba is pioneering a machine that turns the weed into clean cooking fuel. Let's watch this.
On the Kenyan shores of Lake Victoria, entrepreneur Dominic Kahumbu and his team are using rakes in their hands to remove water hyacinth. It's an incredibly invasive plant, covering the surface of the water like a carpet, harming fish and helping mosquitoes and bacteria thrive. But where many see a pest, Kahumbu sees an opportunity.
What we're doing out here on Lake Victoria is we're harvesting this, what everyone considers to be a real menace and a pest, an invasive species, and it has many, many negative connotations to it. But the actual fact is, water hyacinth is a blessing in disguise.
And that's because Kahumbu's company, Biogas International, is piloting a machine that converts water hyacinth into clean cooking fuel. Kahumbu says 2 or 3 kilograms will provide fuel for a cooker, making a meal of maize beans over 4 hours.
The gas is tapped from the center of the actual digester tube.
The project, in partnership with drug maker AstraZeneca and the Institute of Sustainability Leadership at the University of Cambridge, has provided the digesters to 50 families in Kenya's western city, Kisumu. That's allowed residents like Tony Otieno to abandon his traditional stove called a jiko. It runs on charcoal, which Otieno says was costing him about $12 per sack.
The gas has no smoke, it has no smell, then it is much faster than the jiko.
But at a cost of $650, Kahumbu acknowledges that they are not affordable for most families in the city. He says the business needs capital investment, and he's looking to the kinds of businesses that want to buy carbon credits to ensure his greenfield project can stay afloat.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.